All right, everybody, welcome to our live stream today. Just getting started. Somebody popped in first. Glad to see you guys here. I got it right. I got this thing right. It's working. So, hey, good to see everybody here. It is Monday, February 22nd. 2021. Glad to have everyone join me today. I got a lot to cover with you today. We're going to get into stocks, bonds, currencies, commodities. I want to try to show you something a little different than you're going to find everywhere else on the YouTube community, because I've looked at the top 5 or 10 live streams when they're happening, and most of these things are someone sitting there looking at a chart. You can't even see the chart. You might need a 32-inch screen or more to see the chart. And these folks just spend time just kind of talking about what stocks are doing, and not so much about where potential bullish points and bearish points are. I want to do a little bit of that with you. I want to talk about, we're going to get into cryptocurrency as well. I want to talk about looking for those next areas that people are going into. All right, we call them short squeezes, but I want to talk about really where the next, where all the volatility is going, so that you can find it. And I'm going to share with you the code that I look at to spot these opportunities. So that's the plan I have for the next hour or so. All right. So again, welcome guys. Before I begin, I have to explain this first. Let me throw this up on the screen. We'll have this archived, and you'll get the recording on this, and you can watch it again later on this afternoon. But real quick, I just want to mention 2 quick things. Number 1, stock and options trading has large potential rewards, but also large potential risk. And number 2, myself, any of my team that I decide to bring on to this group going forward, and our publisher, which is Money Map Press. We are here as educators to show you how it is that we spot opportunities and create these low-risk alternative trades in the marketplace, and of course, how to plan, execute, and manage them. So that's the spiel. You can read it in its entirety. Just again, on the video you get, just hit pause. All right, what are we covering today? So I want to talk about market news, what's going on in the markets right now. I want to talk about really the technicals, and that's where I'm going to get hot and heavy into. And my technicals might look a little different than everybody else's out there. I'm not going to show you a chart on the screen like this, and then we just kind of sit there and go, well, it looks like it's going higher, but over here it's kind of going lower. All right, I want to do more than that for you. You deserve to have more than that, and I plan on showing you more than that. I will get into this in a moment. But really what I want to do is I'm going to show you fib levels today. So we're going to go into Fibonacci levels. I'm going to talk a little bit about those and how those are spotted. And I want to also get into Bitcoin, and I want to get into Riot blockchain, which right now is the stock du jour in terms of cryptocurrency. So that I want to cover too. And I want to also show you something called pre-computed rankers. So my pre-computed rankers, we definitely want to get into that as well. I am just going to verify that I got the right microphone on, just because. So it looks like the mic that I have on is coming in loud and clear. Again, double checking everything here. And it looks like it is. Let me know if you guys are hearing me loud and clear. Just give me a shout. Tell me where you're from as well, so that we can get into this. And want to welcome all of you there. Hey Carlton, I see you on every single video that I put out there, and I will be putting another video out tomorrow. So this is going to be included in what we do here on the channel. I've got, for those of you who've been with me, I really started doing this about a year ago. All right, we had this channel for years now, but I really started doing it a year ago because of the pandemic. And from there, it just started to manifest itself. and we started doing one video a week, and now we're at 2 videos a week, and we're doing a podcast on here as well. So, you know, I don't plan on ending it anytime soon. All right, I will continue to give you guys education as you continue to want it. So there we go. All right. Let's see. Let's start off with a market overview. And what I'm going to do is I'm going to pop into my tools. I'm going to get to something called Tom's Movers in a moment. I'm going to share all that with you. But right now, I want to talk about what's going on in the stock market. And I'm going to add to this chart. Right now, this chart already has more than most people see on this. Okay? If you take a look at... okay, candlesticks. Again, you can get those anywhere. See this red line? No, this red line gives us an idea of what option traders expect the stock to do, expect the stock to move to, all right, as the markets start to giddy up, if you will. And this is the S&P 500. I went back to around Christmas time. So we're looking at the last 40 days of SPY, and you can see it's gone from 368 up to a high last week of 394. We're starting to roll over a little bit, right? I'm going to share another chart with you is making me cautious over the next, let's say, couple of weeks, all right? I'll share that with you in a few minutes. But what I want you to take a look at here is this is a chart of implied volatility in the red. Now, we started popping back up again. And remember, stock symbols on the left, implied vol. That's the at-the-money implied volatility. What we do is we calculate from options prices. I don't know what camera I'm looking at. I'm looking left, I'm looking right, I'm looking center. So bear with me, guys. We look at option prices, and what we do is we look at those at-the-money calls and at-the-money puts, and this red line represents the options that are expiring between 7 and 30 days. Now, we take a look at those premiums, and then we recalculate them into and express them in percentages. And that's what you see here. This is a red line of percentages of option premium. Now, if you're new to this, I want you to think about this as kind of a hot and cold point. When that red line's down near the low of the screen, it means that options premiums are cheap relative to where they've been. And when they're high on the screen, it means that option premiums are expensive. Now, let's say you don't trade options. You might say, this is a waste of my time. I'm going to go back and look at the Moon Man, all right, because he's talking about charts. Let me tell you what, this is not a waste of your time. What this red line is telling you as it's moving higher is expect more volatility in the underlying asset, all right? I'm going to show you that even in more detail in a moment. But I want to add one indicator onto this chart. And the indicator I'm going to add on is stock chart Fibonacci. So stock chart Fibonacci, you know what? I'm going to grab a big, there we go, big mouse pointer. There we go. So stock chart Fibonacci is going to snap some lines on the screen. And when I update the chart, you'll see what I'm talking about. Now I've got fib lines on the screen. And fib lines will show me the low point in the chart, the high point in the chart, and then what I like to call the buy zones, the pullbacks. So if you take a look at the S&P or SPY for a moment, it's low, and I deal with closing prices. I don't deal with the intraday highs and intraday lows when I'm looking at this. I look at the closing prices. I think they're the most important of any price you want to look at on the screen. So if you go back, for instance, to Christmas, we saw 368, below 368 on the screen. We stabbed through that at the beginning of the year, but stayed above it. Now look at the high. The high closing price was just a week ago, a little bit more than a week ago. We see that high closing price out there. And you know what? Let me move the legend over to the left so we can all read it. All right, so there we go. All right, so you've got, as you see this here, we've got Fibonacci pullbacks. So even though we were at 393 or 392.73 as a closing high, these are the pullback areas I like. 383.09, 380.11, 377.13. Now, here's where it gets a little subjective, if you will. Okay? Here's where it gets subjective. It gets subjective because as I'm looking at this, I can see that Well, if we go back in time, let's say we go backwards a little bit. If we go back, then perhaps what's happening here is by going back, wouldn't I snap some new lines? Absolutely. I would end up snapping new lines. All right. So it's all dependent on where we snap this back to. So I can snap this back. October is a great place to go to because we saw some pullbacks there. So how about I go back and look at the last 80 days? If I look at the last 80 days, that includes the lows that happened in October. And now all of a sudden, as you see, we still got that 392.73 on the high side, but now our low has dropped down to the lows in October of 326.69. Now I've got pullback areas, the 38% pullback, 367.50. The 50% pullback, 359.71. The 61.8% pullback, 351.92. You might say, what do these percentages mean? That's from the low on the graph that was snapped, Fibonacci low, to the Fibonacci high. You see, as the chart went from low to high, here's a 38% pullback, here's a 50. That means it pulled back half the distance between the lows that occurred and the highs that occurred at 61.8, right? So these are Fibonacci numbers. Now, let's look at these real quickly with a couple of other instruments. And the other instruments I want to look at are bonds. Take a look at the bond market. So the bond market is inversely related to the stock market. As you can see, bond market, we saw 161.51. That was back in November, and then we dropped all the way down to where we are right now as in 222. All right, and so we have not yet begun any kind of a pullback to pull back up to an area which might be an area where we may sell. Okay, now it's interesting. I'm going to watch this, and I'm going to watch SPY. And if SPY starts to pull back and go down, then I want to look and see what the bond market's doing, because maybe traders are flushing their money into bonds for the short term. If I see the bond market pull up to the 150 level, or 152.25, or 154.44, these could be areas where the bonds could have that quick run up, run out of steam, and then roll over again. If that's the case, that could be a buying opportunity for the stock market. Okay. Cash. Now, cash is a little bit hard to look at here because, and I'm looking at UUP. UUP is the ETF that we look at for cash. As you can see, you've got 25.40 on the high side. This was back at the near the end of October. And then the low was 24.10, and that actually occurred at the first week of January. Since then, we popped up. And look what we did. We popped up in between the 38 and 50, and we've started rolling over. So this is an idea that the U.S. dollar has not yet made its lows. What could cheapen the dollar more? All right, give me some comments out there, guys. Let's take a look at your comments on what you believe could cheapen this dollar more. And I've got one big thing on my mind right now, but I want to hear what you have to say. So throw your comments in the live chat. We're all live chatting back and forth. And so and I'll try to read some of these as we move along, but I want to make sure that I'm really giving you guys some education here. So I apologize in advance if you're asking me a question on live chat and I'm just not getting to it. All right. What I'll try to do is leave the last few minutes of the day, and then we'll kind of do a live chat together. All right. So again, I am seeing the areas. Unemployment news, stimulus. That's the one I was thinking of. That $1,400 check that I'm hearing so many people wanting to get. We throw that out there. You've got the news that came out last weekend was a $2 trillion additional stimulus package and another $2 trillion to climate change. One, I believe, is needed right now. The other one, is one of those things that both Republicans and Democrats have been kicking that can down the road for years, if not decades. So, but yeah, I mean, the stimulus is what I'm seeing. But unemployment news, obviously, the slow growth, the fact that everyone, there's fewer and fewer people that think that the end of the pandemic, which some people were saying this is going to end in April. I mean, April's just 5 weeks away. The pandemic's going to end in April. Okay, let's just toy with that one for a moment. So if the pandemic does end in April, what ends up happening? With is everyone just going to take their masks off and start spending money? I don't think so. So I think that we're going to see more and more. Yes. So we had some family fly down. All right. Yes, they got their masks on. Anybody that's asking that question. But I asked, my questions are always, my wife was, how was the flight? Oh, did they feed you? Did you get drinks on the flight? You know what my questions were? How many vacancies did they have? Are the middle seats still empty, or are they filling up the middle seat? How many flights were coming from New York to Sarasota? I'm asking questions like an investor would ask. And, I had to look at my wife and go, I'm sorry. You wanted me to mingle? I'm mingling. But anyway, so I'm looking at things to see what is the travel industry actually doing, and is there something that's going on that I don't know about, that we're not hearing about. So these are the things that I'm asking. So back to cash. You get a stimulus, you get added stimulus, you get continue or an economy that doesn't jumpstart like everyone thinks it's going to. Cash is going to go down. What does that do to commodities? Well, that pushes commodities higher. Take a look at the commodity I have on the screen right now. This is USO. USO back in November, the beginning of November, was trading below 26. The highs are happening right now. So if we were to get a pullback in crude oil and USO, the pullbacks we're seeing are just below 35. That's the 38% pullback. You've got a 33.10. That's a 50% pullback. And then you got the 31.25 level. That is a 61.8% pullback. So there's quite a bit of pullback that could happen. But here's the thing. We are heading into a bullish seasonal pattern for oil and energy stocks. And I'm talking about dirty energy. I'm not talking about clean. Clean energy, I don't have a 20-year history on clean energy. I got a 20-year history on fossil fuels. And 75% of the time between mid-February, we're in right now, and mid-July, these prices tend to move higher. Now, it didn't work out so well last year, but fundamentally last year, people stopped traveling. So I don't want to deduct that because that's a year of raw data, but just keep that in mind. Now, this is a year where people want to travel. The RV industry has gone gangbusters. Go to your local RV dealership, and right now they're actually starting to stock again. And you know how this is going to end. They're going to overstock like most of these companies are doing now. Now we got more masks than you know what to do with. Last year, you couldn't find a mask to save your life. This year, masks are everywhere. And the same thing's going to happen, I think, in the RV and travel industry, where they're overcompensating. But I still think that that's not something that's going to happen right away. I think we're going to see a couple quarters. And as we get into summer, the folks that have RVs are going to be using them. But by the time we get into the fall, we may see a lot of used RVs on the market, and that's going to compete with the new stock as well. Okay. But what I'm saying here is that gas prices, oil prices, commodities. Let's take a look at gold, GLD. And so GLD has been in a downtrend, but it got a little bit of an interesting pop today, right? I'm an owner of GLD. That's nothing. Any of you that have been following me for some time, that's no surprise, all right? I'm an owner of GLD. You can see here on the chart, we have seen a little bit of a pop, but is this pop just a relief rally from the drop that we've seen? We saw the highs, and these are the highs, not the August highs when GLD was in the mid 190s, but this was the 183 high that now just last week we dropped to new lows down around the high 160s. Well, we popped today, trading around 169.64. But if you were to look at areas where we could gravitate to, 172.78, that's the first area I see. 174.77, 176.75. We could run into some resistance there. All right. Let's move into, well, let's get into FAANG. Let's look at some FAANG stocks. So FAANG was the first participant in the run up, and it's been the big rollover on the way down. Take a look at Facebook. Facebook's all-time high, or high for the last few months. Didn't happen yesterday. Didn't happen last week. Didn't even happen last month. It happened back in November when the stock hit 295. So the stock hit 295. It came down to 245. Now I want you to look and see what's going on with this chart. We jumped up. We pulled back down, but we hit the resistance level right over here, just above 275, and we dropped below the 31% or the 38% level, and now we're moving lower. Could we be going back down to that level of 245? It's possible. Okay, hang with me here a little bit because I want to show you a couple other things, and then I want to show you some forward-thinking information. All right, so that's Facebook. Apple. All right, here's a chart of Apple. Apple did hit its new highs just below 145, but that was back a month ago. All right, in the last month, we've seen it roll down. It hit now you see it hit the 38% retracement level on the nose, rebounded, and then rolled over. We are hitting the 50% retracement level right now. So if you like Apple as a long-term trade, this is an interesting area right here where we've hit. Now, the next area of support is going to be the 61.8% retracement level, which is at 121.91. Then the lows that happened late last year, 108.77, could come into play. But these are some interesting areas. You know, notice what Apple did is it ran up right before earnings, and it had a stellar earnings report. So did Amazon. I believe Amazon actually doubled its earnings per share, and we'll take a look at that stock next. But it's been this earnings quarter for tech stocks has been buy the rumor, sell the news. So we saw the news sell off with Apple. Look at Amazon. Amazon also is hitting a 50% retracement from its lows of 3,000 to its highs that happened just about 2 weeks ago, down around the 33.80 level. And it too happened after earnings. Earnings report, it popped and it dropped. And so we've been in this range for the last couple of weeks. Well, we broke down below the range, and we're trading just below 3,200. Right now, we're sitting right on the 50% retracement level on Amazon, just looking back to the end of October, from the October lows to the recent highs. All right? So we see that. And again, look at this round number support down here, just above 3,000. That's an interesting one as well. All right. So let's move on to Netflix, NFLX. It's all-time highs. We're closer to the overall market, but not quite. Its all-time highs happened in around the end of January. We saw the pullback dropped right down to the 61.8% retracement level. We had a run up, didn't last long. We're cruising right through the 38, heading to the 50. If we get back down below the 61.8% retracement level, we could be going back down below 500 again for Netflix. Netflix, if you look at the fundamentals, they had an earnings report which missed, but they did have a subscriber jump, which is what caused the stock to jump. So what the stock's trying to do right now is get back down to where we were before the earnings report. Here's some fundamentals on Netflix. Netflix has got more and more competition almost every week. Somebody else is coming out with more of a paid subscribership. So I got most of these channels. I've got, other than cable, I got Netflix, I got Disney Plus, I got Hulu, I got Vudu. I got more than I can. Some of them I can't even pronounce. All right. You know the latest one to come to the Gentile household? Peacock. You know, why Peacock? Because Peacock streams Yellowstone. And now Peacock is starting to stream movies that you can't find anywhere else. And I'm kind of thinking that all these guys, they're all out there and they're grabbing they're grabbing movies and they're grabbing rights to movies and they're buying up pieces of movie art, if you want to call it that, so that they can stream it on their own channels as a paid service. And so that kind of stuff doesn't bode well for the powerhouse like Netflix. All right, but Netflix has a lot of stuff going for it as well, too. So, at the end of the day, for me, it's all about the technicals because a true technician knows a couple of things. Number one, volume precedes price. And number two, price precedes news. Okay, Google. Now, Google is the one stock that really has moved with the S&P. As you can see what's going on with Google, I'm looking at the chart. The lows were down there around just above 1,500, and that was prior to Election Day. And then we had a jump, and then we moved sideways for the longest amount of time and got caught in a range here. Well, we busted above that range just after earnings. And now it's been in a new range, which has a low of around 2050, which we hit today, and then the high, which is 2118. Now, if we close below 2050, which is an area of support that this thing is held for the month of February, then most likely my next area that I'm looking at is 1886. No, that's not a date in time. That is the 38% retracement level that you see here on the chart. 1886, 38%. You got 1814, which was the 50% retracement. All right. Didn't Davy Crockett, wasn't Davy Crockett the 1814? We took a little trip. 61.8, 1742. I'm sure that might be an interesting date back in history as well. But as you can see here, buy zones. Now, I still haven't gotten into the YouTube community stocks, which are Riot and CCV. I'm going to get to those in just a moment. Before I do, however, I want to show you something else. Now, we've looked at stocks, bonds, currencies, commodities. We've looked at FAANG stocks, Facebook, Apple, Amazon, Netflix, Google. And what we've noticed is a couple of things. Potentially a little bit of rollover happening, all right? Potentially tech stocks are leading the charge, and the S&P 500 and really the Dow Jones Industrial Average is the caboose on this train if this train is turning southbound. So what potentially could happen in the next couple weeks to come? Let me show you what I'm looking at. So this is something on our software at tomsoptiontools.com that's called the money calendar. The money calendar, what I do here is I look at stocks that are highly liquid. There's about 325 of them that I look at right now. So out of the thousands upon thousands of stocks, out of the 3,500 plus optionable stocks, I'm looking at about the top 10% of optionable stocks. I'm looking at about the top 1% of stocks in general. And what we're doing is we're taking a look at those 325 stocks, and we're seeing if those stocks have some sort of pattern about them. And so literally I'm looking at millions of points of data on the screen. Well, not me physically. I couldn't look at millions of data points. If you're an old school person with me, how many of you remember the publication that used to come out? You used to get it in the mail once a week. It was called Option Guide by Daily Graphs. Now, if you say yes, you're going to show your age here. Because this was something that was published a long time ago. Let me tell you a couple things I remember about it. The book was probably about that thick. The second thing was that it was printed on paper that you could almost see through. And then number three, by the time I got to the end of this thing, studying it page after page after page, by the time I got to the end of this thing, the new guide came. It took me a week to go through the whole data. So I know that there's no way I could go through millions of data points, but that's what the computer's for. That's what my programmers have designed for me. So what we're looking at here is this is the calendar of February that you're seeing on the screen, just above my head. And when you see that calendar on the screen, you see a lot of green on the screen. What it shows is the dates of the calendar. And beside each date, I'm going to blow up the first here real quick so you can see it. All right, so here is Monday, February 1st. Yes, I know it was a few weeks ago. But if you notice here, I have, out of all the stocks we're looking at, 106 of them are popping up on Monday, February the 1st. What I notice is that 102 of them are showing bullish seasonal tendencies going forward. And only 4% of them on the 1st show me bearish seasonal tendencies going forward. Going forward, you say, yes. So this is something that we're looking back in time, a minimum of 10 years of data, to find these buy and sell points in time. And yeah, this is a lot of work. This is a lot of code, and this is also something that is that we've put out for a patent by the USPTO, and so it is years and years and years of work. Anyway, what we do from this point forward is I'll then click on that little window, and that little window is going to bring up, and this is February 1st now, the little window is going to bring up the stocks that are bullish. And if I go down all the way at the bottom, I'll see those 4 stocks that were bearish on that day. There they are. And what I'm able to do is I'm able to look at these and kind of garnish some kind of an idea of what these patterns look like. So NVIDIA was a 15-day pattern that started on February 1st. And what did this pattern tell me? Well, it told me that this is the net profit that NVIDIA brought in. It's been 100% accurate for the last 10 years. It's averaged $11.13 per year. That's the winners and losers combined. Well, this one didn't have losers in the last 10 years. It had no losers. The end date is February 19th. We've already passed that. And then it shows me something called power meter, and a power meter just tells me how good that trend actually is. So if I look at NVIDIA and I get a little bit more information on it, all right? So here's NVIDIA, 15-day trade, 11.13 on average. Here's what it's done. Now, if you take a look at the chart back to 2011, it really didn't do much. I mean, it didn't do much at all during these points in time. But look at the last 3 years, $7.90 on the pattern. All right, $23.74 in 2019, $66.98. Now, part of that is because the stock got more expensive. So, obviously, it's going to jump a little bit more. But if I look at what happened last year, I'm going to click on that little line. Look at that pattern from January 30th up until, in this case, 220. That was a nice pattern, right? Now let's look at 2019. Same thing kind of happened. There's January 30th. That was the start day for 2019. And then here is 220. All right, that's the end day for 2019. Nice pattern. So this is a write-down moment, folks. The write-down moment is, next year I need to look at NVIDIA between February 1st and February 20th. Right? So I have patterns on these, and these patterns move around a bit too. So what I do is I get a cluster of these patterns, and what happens is my software will find the best cluster and then present it to me as they come out. All right, so I wanted to show you that because I want to go back to the month, and I want to show you something with the month. Here's the month of February. Now, it's looked pretty good the first 3 weeks. See that? First week, nice. Second week, nice. Third week into the 17th, nice. Then it started turning a little bit yellow, right? And on the 18th, we had 54 signals, and we had 61% bullish and 39% bearish. So we actually we're starting to see a little bit of a turn in the calendar. And then it went 59.41 on the 19th. All right, let's go back and look at, I want to show you the S&P once again, or SPY. So let's go look at SPY. S&P, and you know what? Let's just look at a 30-day chart. Now, that's the last 30 days. It's going to show some January in there too. But here's February. Look at February. Up, up, and away. And then we dropped off that high last week. And, of course, we rallied back. We rallied back. This is Thursday. Down. This is Friday. Or this is today. Sorry, Thursday, Friday, today. Thursday had a lower low. Friday opened higher but closed lower. And where are we today? We're lower, right? So I find it interesting that this gives me an idea of, again, starting to roll over a bit. So what about today, Tom? What about the rest of the week? What about next week? here's the next 2 weeks. The next 2 weeks, this is today, by the way, the 22nd. All right, we're seeing 74% bearishness now. This is on the top optional, top liquid stocks. Okay, so we see that on the 22nd, 23rd, get a little bit of a pullback. But if you take a look at the next 10 days, 4 of them this week show more bearishness than bullishness. All right, 3 of them next week show more bearishness than bullishness. So we see over the next 2 weeks, potentially the market. This is at least 9 in the last 10 years. It will not show up on this calendar unless it's showing me 9 of the last 10 years. It doesn't look at 8, doesn't look at 7, doesn't look at 6, doesn't look at 50/50s. It has to be at least 90% accurate to show up on the screen. Okay? So there you go. So this is giving me an idea that, okay, maybe I want to pull back a little bit on my longs for the next couple weeks, which for me I have. All right? For me, I added cash to my position. I built up cash in my position. So I want to deploy cash if I really believe this is going to be a short-term occurrence, which I believe it is. I believe we're going to get a bit of a pullback. And so I see the money calendar kind of telling me that, hey, you know what? You might want to wait a few weeks and then start dialing back in. And obviously, there is no such thing as a guarantee, all right? And obviously, time will tell. So we'll be back again at this next week, and we'll see what happened this week, and we'll see what's happening the week prior, and we'll get into it then. So that's what we see with the money calendar. Now let's take a look at cryptocurrency charts, because I haven't talked about Bitcoin, and then I want to look at Riot. I want to look at Riot blockchain. And guys, I've got Jay, my support guy, in here live, so he is answering some of the questions for you, questions or comments that you have on the screen. I want to also mention, for those of you that are just showing up, because we had quite a few people come in after we started, we're not investment advisors. All right, I've been saying that for decades now. We don't give specific investment advice. So if you're asking, if you're asking for me to look at something, that I can absolutely do in the room. But what we can't do is we can't tell you what to do. That's between you, yourself, your investment advisor, your broker, your spouse. That's where that conversation should be. All right, so cryptocurrency. Now, I've got Bitcoin already up and on the screen, and as you can see here, you can see that Bitcoin. And what I did was I snapped. Let me look and see a 50-day chart of Bitcoin. Now, a 50-day chart of Bitcoin is going to be a little bit different than a 50-day chart of the stock market, because a 50-day chart of the stock market means that weekends and holidays were not included, so that's going to go back much further. But 50 days in crypto is 50 days. That's weekends, that's holidays. There is no day off in the cryptocurrency market. So this goes back to the 4th of January. And on the 4th of January, we were trading around 30,000, and we popped up to 40, back down to 30, back up to 40, back down to 30. And so 30, once, twice, 3, 4 times, was a very good level of support. Now, those of you that follow me on my YouTube channel, and that might be many of you, keep in mind, we've discussed cryptocurrency quite a few times, okay? And so you all know I'm a fan of cryptocurrency. You may also know that that I also have some not just Bitcoin, not just Ethereum, but I'm in a couple of other cryptocurrencies as well. I have stuff that's stored on an exchange like Coinbase. I have cryptocurrency that's on this little guy here. This is cold storage, is what this is called. All right. So, but I will say this: we have been very, very bullish on cryptocurrency, on the crypto markets, for quite some time now. I am still bullish on the cryptocurrency markets, even at these levels we see here. My cryptocurrency, my 2021 outlook was 50,000 by the end of 2021. We hit that by the middle of February. And so we saw 50,000 that got hit a week ago. And now we're hitting 57, 469, 58 or so. It's It's crazy. It is. My new outlook on crypto, I'll throw it at you right now, guys, is somewhere in the high 60, the 65 to 70 range. All right, if you really want a number, 67,000 is what I'm looking at on crypto. If we get to 67,000 rather quickly, you're going to see me you're going to see me take some crypto, some of my Bitcoin off the table. All right. Now, I see a couple of questions and comments coming in about cryptocurrency and what is a hard wallet, etc. I'm going to do this. I want to invite all of you here to a webinar series that I'm doing. Some of you in the room already know what I'm talking about. I've been doing something called Tom's Trading Essentials. I did this over the last couple weeks, and I did this in the stock market. So 2 weeks ago, we talked about all about calls, all about puts. Last week, we talked about all about spreads. We also went into some different signals that we're having. This week, this Thursday at 4 p.m., I am doing a webinar. This will be week 3, and I'm going to go into cryptocurrency essentials, and I'm going to talk about what I did as a miner when I was mining cryptocurrency. I'll talk about mining cryptocurrency. I'll talk about something called cloud hashing cryptocurrency. I'll talk about hard wallets. All right, and I got a couple of wallets. Here's another little wallet right here. See that? There's my other wallet there too. That's a wallet as well. And I'll talk about these. These are by a company called Ledger, and I'll get into that in more detail. But it's just a way to store cryptocurrency offline if you're concerned that you might get hacked. It's a level of security that you can use. All right. So I'm going to get into that. That's absolutely free. Come join me. What I will do is I will post. In fact, Jay, if you can hear me, can you throw a link out there to everyone? And I'll post it in the. I'll post it to those of you that are, that get emails from me. I will also post it in the communications part of this channel. So where I communicate and I throw a little discussions up here or there. I'll throw that out there for everyone as well. So you will be able to find it. If you hit the notify button on this on our channel, you'll get notified with that link. And please come join me, be my guest. We'll talk about cryptocurrency essentials. Okay. Now, what I do here with crypto is I have a number of different things that I can do with cryptocurrency. I can look at this chart, and I can look at it with Fibonacci. And I see that we came very close today to the 38% pullback, as you see here, 47,138. We got into 47s, but we didn't quite hit 138. I've got a 50% pullback, which is 43,946, and I have a 61%, which takes us all the way down to 40,754. This is based on just the price action that's happened in the last 30 days. Let me put that right in the screen there. See that 30-day? I was tagging that 1, 2, 3, 4 times 30,000 level as the low, and then what happened yesterday as the high to get these first round pullbacks that we're looking at. Okay, so that's an area there. Okay, Jay, you just said something, and I want to say this to everybody. If you guys you guys want that link and you don't get that link by tomorrow, then email us support@tomgentile.com and we'll get you that link. We're happy to get you that link. We're happy to have you come on and join us. As I will be making some other announcements on Thursday at 4 p.m. as well. So this is Bitcoin. All right. Let me throw another one up that I'm a big investor in, and that is Ethereum, ETH. By the way, on Thursday, I'm going to show my unless the legal department has a problem with it. I am going to show you my Coinbase account, my public account, and I will show you what's happened there. I see these short stories and I see these things on YouTube. Oh, look how I took my $100 and turned it into 1,000. Look how I turned my $1,000 into 10,000. I want to show you that 10x return, And I'm not doing it to brag, guys. I've been in this business way longer than that. Okay? But I want to show it to you to show you what's happened to my account in the last year and that it is possible. Okay? I want to show you what is possible. So, and again, it would, I may have to throw that that disclaimer. What's the one I'm thinking about? It says your mileage may vary. I think because it obviously does. We're all different. We all have different investment styles. We all have different things that we do. But I just want to show you what could be done. All right, so I'm going to show that on Thursday. All right, after 4 o'clock. But take a look at Ethereum. So here's Ethereum. This is a really good one. Ethereum. I will tell you where I was buying Ethereum. I bought Ethereum. Let me take I'd love to take us back to let me do a calendar if I can. Yeah, calendar. Well, calendar days are going to take me back. But last year after the pandemic, I saw Ethereum climbing. Bitcoin was already up very well. Ethereum was trading around the $600 level. Let me go back 75 days and see if I can find it then. Is it 75 days? Yeah, there we go. So I was buying it around this area here, all right, around 600. And it dropped below 600 for a bit, and then it climbed above, dropped below. But I did a pretty decent-sized purchase in Ethereum at around the $600 level. At that time, it had not seen $600 since maybe 2018. All right, it went as high as, I think it was 1,400 was the all-time high at the time. I looked at 600 and I looked at where Bitcoin was. And I was saying to myself, well, Bitcoin's trading really close to its all-time highs, but Ethereum is not even half the distance to its all-time highs. That made me decide to make the purchase. Now, Ethereum traded above 2,000 on Saturday. Dropped down. Look what it did today. So today it dropped down, and we're talking about something that dropped down as low as 15. This thing was off 25% in the last 2 days. And what's better about it is it came dangerously close to hitting that 38.2% retracement level at 1417 before bouncing. This, I think the volatility is just beginning on this. I think that in the terms of a movie that I remember, the traders in Ethereum are doing the shake and bake. The shake and bake is, let's see if we can shake anybody out that got long at around the 17, 18, 1900 area. Let's see if we can shake them out and then move this thing higher. But that's what I think may be happening here. That's a big move to happen in one day, nearly 25%. And I'm talking about 25% from Saturday. So a 48-hour move that had a 28% move, and the day is just beginning. So looking at Ethereum based on the last 75 days. And again, if you really want to go back and look, here's the area where we saw that 61% retracement. That was the lows that was occurring when Bitcoin was doing that once, twice, 3 times a lady on the support level, where Ethereum was just creating higher and higher lows. And as you can see here, we've hugged this 30-day moving average quite a bit. Well, we dropped below it, but came right back above it. This all happened, I think, within an hour, less than 60 minutes, the big drop down and then the preceding climb, but still trading at a discount to where it was just 2 days ago. I like these areas, 1417, 1250, 1084. 1084, that's an incredible price on Ethereum. I look at just based on the fact that the Ethereum network itself is where a lot of coins are created. So there you go. And again, I'm going to get into more details on all of this on Thursday, but I wanted to just show you where some of my buy zones were on the top 2 on Bitcoin and Ethereum. Now, we look at a lot of altcoins or microcurrencies, if you will, and that's something that we do on a different service with Money Map Press. We have had an absolute stellar time with our shorter-term coins or our smaller coins. But in this environment here, I want to show you the biggies and what the big ones are doing. You might say, well, Tom, I can't afford to buy an Ethereum for $1,700. I can't afford to buy a Bitcoin for $54,000. You don't have to. These are fractionalized, right? That you can buy them down to the smallest minute number. So there you go. That's Bitcoin and Ethereum. So guys, I want to move to the new Johnny come latelys in the stock market. Okay. Again, I'm going to leave it here with crypto. Come join me on Thursday as we talk about Bitcoin, Ethereum, Litecoin. I'll get into a few others. We'll talk about different ways to profit from cryptocurrency, mining, cloud mining, as well as the crypto investor and the crypto trader. We'll talk about that too. And I'll talk about, even for those of you that have never traded a cryptocurrency in your life, all right? Those of you that are on here, if you've never traded crypto in your life, then what I'll do is I'll show you how to open, all right, open your account. I'll show you how to open a Coinbase account, all right, or a Binance account. We'll talk about that as well. All right, so let's get into these crypto stocks, all right? And I'm talking about a couple of them that the big one is Riot Blockchain. We got to talk about Riot Blockchain. So what I want to do is, before I get to Riot Blockchain, let me move this back to BTC because I'm setting up something here. So here's BTC, and I'm looking at, again, this is the last 75 days, but I'm going to dial this down to the last 30 days once again, because this is where all the excitement is, the last 30 days. And you can see there's the low back there right around 30,000, and that was happening at the end of January. And of course, the run up to 57,469 before we saw that pullback that we've seen happening today that has taken us down to around the 52.5 level, which is where we're at just recently. Now, I'm going to set that up. I'm going to leave that right there. I'm going to move over to my stock charts, and I'm going to bring up Riot Blockchain, RIOT. Now, this one, we can look at the last 30 days as well, because it didn't take off like Bitcoin did right away. It took off within the last 2 weeks. So if you look, again, here's the low with Riot, if you look at the last 30 days, and it was at 127, all right? January 27th was its low, its Fibonacci low before it ran up. Bitcoin Fibonacci low actually occurred the same, the low occurred the same day, but the high was, or the low that we clocked was 128. Now, again, if you go back, you'll see Bitcoin jumping from 30 to 40 to 30 to 40 to 30 to 40. I just took the last 30 low because, again, looking back at our stock chart, you saw blockchain, Riot Blockchain kind of going 20 to 30, 20 to 30. Now, 30 to 40 is going to be a lower percentage move than 20 to 30. So Riot is really the alpha of cryptocurrency. And what I mean by that is this particular, if you want a stock that moves with cryptocurrency, Riot Blockchain obviously is the one to look at, because it moves up when Bitcoin moves up, it moves down when Bitcoin moves lower. Why is that? Because that's the business Riot Blockchain is in, mining Bitcoin. They got over 6,000 ant miners. These are ant miner machines. They're just big computers on a server farm located in upstate New York. And so what Riot, now an interesting thing is that Riot used to actually be a biotech company a couple years ago. They decided to just throw away their entire business plan and become a Bitcoin mining company. They saw more of more potential mining Bitcoin than they did in the biotech industry. And I think they also saw a lot less regulations. So that's what they ended up doing. The stock traded at a premium in the beginning when they started filtering this message out. Then it dropped down, and it was, I want to say it was around 50 cents, 52 cents as a low. This was just last year. 52 cents to $77, okay? Bitcoin last year, its low was let's call it 5,000. I think it was in the fours, or maybe high threes. 5,000 to 50,000. Okay, so 5,000 to 50,000 is a 10x event. But 50 cents to $50, that's a 100x event. So you can see that Riot Blockchain has been moving at a factor of 10 to Bitcoin. All right, so that's Riot Blockchain. Now, a couple of things I want to mention to you here. If you take a look at SPY, and we looked at SPY, Where was the VIX? Where was the implied volatility on the SPY? It was trading in the 20, around the 20 area, right? Look at the red line here. I'm actually going to turn off the stock chart Fibonacci. Actually, before I do, guys, let me mention this. For those of you that really like Riot blockchain, here was the high that occurred. This was last week, $77.90. That was the high during the NYSE hours. It actually went up to just below 85 in aftermarket hours that particular day. And it has had a bit of volatility in it since then. But if you like this, all right, if you like this as a buying opportunity, there's $54.99. That's the 38% retracement. There's 50%. That's that 50% retracement clocks it at $47.92, and 61.8 clocks it at $40.84. Now, I have to be open and honest with everybody in the room. Yes, this trades like Bitcoin. Yes, it's moving a lot faster than Bitcoin, and if Bitcoin makes new highs, the probability is that Riot blockchain will make new highs. I did a rather large bearish put spread on Riot blockchain. Why did I do this? I did this because I can't trade options on Bitcoin itself. So I thought what I'd do is I would hedge my Bitcoin position, or a portion of my Bitcoin position, by going bearish on Riot blockchain. So bullish Bitcoin, bearish Riot blockchain. They both kind of move together, but I'm thinking if Bitcoin pulls back and pulls back into the 40s, this thing's going to pull back a lot and could pull down to that 61.8% retracement. By the way, that'd be the sweet spot for me if it did that. But I'm just throwing it out there, guys. I'm not going to tell you what my trade is. I don't want to appear to be front running. Okay, so that's why I'm not going to do that here. We'll talk about buy and sell points all day long, but I can't, or I'm just not going to show you exactly what it is I'm doing. Because I don't want anybody to get some kind of idea that I'm showing you something I'm doing to try to drive volume into that trade. Not going to do it. We saw that happen with GameStop. We saw that happen with AMC. And I even reported on it right here on this channel. So that's just something that I'm not going to do. It's something I've never done, and I'm not going to start anytime soon. So if you take a look again at Riot blockchain, it like I said, it does correlate well to Bitcoin, but it's going to have a lot more volatile moves. As an option trader, if you're looking at trading options on this, let me introduce you to something called extreme volatility. The IVs over here. Remember I said that if you looked at the S&P 500 at IV, you'd be lucky to see 20. All right, let's take a look at it real quick. So SPY, and then take a look at the right-hand side. Oh, excuse me, we're at 17. We're cheaper than 20. This is the at-the-money option traders and what they see happening with options in the overall S&P 500. Now back to Riot blockchain. Riot has implied volatilities that are in the 200s. 250 right now. 200 last week, almost 290 was what we saw in IV. The other thing I noticed is that the implied volatility has gone up with this stock going up, and it's come down with the stock kind of dropping back a bit. That's not something you typically see with the stock market. With the stock market, typically you see options premium explode when the stock crashes, and options premium gets cheap when the stock goes up. So did Riot blockchain kind of come off the rails, and now its volatility is moving lock and step with price? Right now, that appears to be the point. So if you are bullish or bearish on Riot, take a look at what it's going to cost you as an option trader. I'm actually going to come up here. I'm going to click on charts. I'm going to click on option chains. And hey, let's just look at this Friday. This Friday, and I'm going to go look at 50% above and below that stock price. So if you're looking at, this is calls on the left and puts on the right. Let's just look at the call options. Here's the stock price. $65.38. That's a snapshot, by the way. Look at the 66 calls. Going to cost you, this is with 4 days to expiration, going to cost you over, almost 10% of the stock price in 4 days. All right. 67s, 588. Oh, what about those out of the money calls? What about the 70s? They're still going to cost you almost $5 to get to have the right to buy Riot at 70. All right, let's go down a little bit more. Look at the 75s. To get to have the right to buy at 75, $3.43. You know where that's going to be in 4 days? To break even, $78.43. You know where it's got to be to have a double? About 81 to 82 is going to give you a potential double on this trade. 82 is going to be it. How about the 80s? The 80 calls. By the way, I see the most open interest out here on the 80 calls. A lot of traders are owning the 80 calls right now on Riot blockchain. Right now, these are out of the money. They cost about $2.50. That's $250 per option contract. The probabilities that that's going to expire in the money are about 26%. So if we're flipping coins, 3 out of 4 times as of right now, that's coming up loser. 1 out of the 4 times it's going to come up winner. I don't like those odds. I like something a little different. So one of the ways we could be bullish on Riot blockchain and get paid would be to sell puts. Now, what can we sell? What can we sell for $2.50 with this week? Well, there's one right there. The 56 put. That is 10 points away from where the stock price is right now. So stock's at 66. You would be obligated to buy it at 56, and you're going to get paid a premium of almost $2.50. So what does that mean? That means I'm going to get $250 if I sell that put option. What else does that mean? Well, it means I'm on the hook if by Friday afternoon, Riot blockchain is at or below $56. All right, but if you want to own it anyway, you want to own the stock, why buy the stock at 66 when you can get paid to buy the stock at 56? That's what I say. Again, not an endorsement. Again, I don't care what it is that you specifically do with your stocks or your options. I'm here to educate you on alternatives. This is what I think an alternative that makes sense. And the alternative would be, look at it $10 below. Hey, you want to go lower than that? Look at the 50s. The 50 puts are trading for $1.04. You can get over $100 to be obligating yourself to buy the 50s, $1.04. Okay, so that's the idea that I'm throwing out there to you. Now, let's say that you don't want to be on the hook for that much. $50. Hey, I'm going to take $100 in. What's my risk? Well, your risk is 50 to 0, 50 points minus $1. So your risk is 49 points or $4,900. But we're talking about Riot blockchain going to 0 in 4 days. The probabilities of Riot blockchain going to 0 in 4 days are very, very low, right? So I'm throwing that out there. What's the probabilities on this? The probabilities on this being profitable, statistically, you see that 11%? That's the probabilities of you losing money on it. That's the delta. What I do is I take 100 and I subtract that 11.61 from it. And we're talking about an 88.4% chance of being at break even or better by Friday's expiration. Those are odds that I like to get my hands around. So just a couple of ideas. There's so many things that you can do here. Oh, by the way, take a look at this. There's a lot of traders that are in the 50 puts that expire on Friday. Now, some of those might be long traders and some of those might be short. That means some of them may be buying those options. All right. In fact, 69.34 are long and 69.34 are short. This is the combination of long and short trades that are open right now that they've yet to close these positions. All right. So there you go. Now I'm running a little bit over time, so I'm going to end it. I'm going to end it with something else here. Where are the areas that we can move to? Where's the next group? Where's the next group of stocks that everyone's going to be interested in? Okay, so I have in my my stock category. I mean, Tom's Option Tools is more than just options. It's more than just trading options. We've got rankers. We've got stock rankers with RSI, ADX, MACD, Bollinger, Stochastics. Tom's Movers. Tom's Movers is one that I have that's specifically designed for such a situation as looking for the stocks that have a lot of movement in them, and not just one day, but a series of days. But we've got all kinds of stuff in here. Candlesticks, we've got earnings. I've also got rankers on options, and I'll save the rankers on the options for next week. We'll look at those next week. But take a look at this. So you've got my Tom's Movers. I've got it all set up here, ready to go. And I'm looking at a stock list. Now, I've got access to all kinds of stock lists here. So if I look at the Penny Plus Weekly list, this is the Penny Plus Weekly. And it has to be a penny pilot stock. That means that the options have bids and offers that trade inside the 5-cent window, so they're liquid. And it also has to have options that expire weekly, not just monthly. So I'm going to run a search on this. Now, what I'm doing is I've got my wizard criteria over here. That means I'm going to look at the last 7 days. I'm going to look at any stock that's $25 or higher. I want to see at least a 4% move. That's a wide move on average every day for the last 7 days. And then I want to correlate it to the S&P, meaning I want to see how it moves to the S&P over the last 20 days. All right, let's go ahead and hit the search button. And there we go. 1 second is all I needed. And here's what I've ranked. So I have ranked these 39 stocks that have a 4% move or greater. If I want to make that list shorter, let's go to 5%. Let's do a re-rank. Now it's only 17 stocks. There's our 17. Let's go ahead and work with these. Grow Generation Corp. I bet I know what that is. And I can come over here and I can see, here's the symbol, and I can bring up option data on this. I can look at the stock chart itself. I also have something called Mover. I'm going to take a look at that in just a moment. But take a look over here. You've got a stock close of 55.5. Look at the average move, that percentage point. That's 8.67% on average. But I'm looking at the stock mover's median percent. Now, this percent right here just kind of shows you where the stock ends up at. Up, down, where are we right now? This is the median is what I'm interested in. What's that median move? That's the distance between the high minus the low on the ranges. And then how well is it correlating? And that's what I actually have it ranked by. So if we take a look at, let's take a look at Grow real quick. And I'm going to look at it on a mover chart. So the mover chart looks like this. This thing's been moving around a lot. 5% movers back and forth for quite some time. The only time it hasn't been moving is when you see the chart broken. So right in here, we're seeing those ranges from the high to low. They're exceeding 5% on that average of 7 days. Now let's go look at Overstock. Overstock.com. Now, what's been going on with Overstock? Well, Overstock was one of the very first retail companies to accept Bitcoin. And so you can believe that Overstock is moving a lot with the Bitcoin community. But also we can see that it has had a fair amount of moves that greater or equal to 7 days. So you can see here what I'm looking at is I'm looking at 100% of the high-low divided by that 5% close, all right, greater than 5% or greater for 7 days, equal to or greater than 7-day movement. And then I'm basically painting the chart to look at what's out there that is, maybe it's being talked about on social media, maybe it's being talked about on mainstream media, but I can see this a lot before it even happens. So that's the code, guys. The code that I'm looking for is you put this on liquid stocks. You take a look at the high minus the low. Divide that by the close, all right, over the last 7 days. And I'm looking for things that are trading 5% on those 5% ranges. And as you can see, here's the stocks that are in question right now. Grow Generation, Overstock, Riot Blockchain, 3D Systems is on here. Hooyah, Tilray. Okay, so I got a Direxion on here. I tend to ignore those. All right, I'm not a big fan of those 2 times, 3 times shorts, ultra shorts, etc. I stay away from those. Kensington Capital, Stratasys, Virgin Galactic, Green Power Motor, Workhorse, Fubo TV, Planeteer, which is that one's been talked about a lot. SunPower, NanoX, and there's GameStop at number 17. It's still moving around a lot, right? It is starting to calm down from where it once was, but still moving around quite a bit. All right. So guys, you know what? I'm going to leave this list right here on the screen. Obviously, I've got to move it in an area where you can see the list and you can still see. I think probably the most important part of the list is going to be obviously the symbol. There we go. All right, let me take a look and see what's going on the chat box real quick. Let's see. If you sell Feb 26 out the way puts, and you can make 10% in 4 days, provided you had the cash to buy the shares if they're exercised. That's correct, Claudio. That is correct. You look at that percentage. But the one thing that I like to do, and again, don't do something because I do it. Do something because you feel comfortable about doing it. Again, I'm not your investment advisor, but here's what I look at is that I like to do something called cash secured puts, and that's exactly what we're talking about. Cash secured puts in the event that you do get assigned, not exercised. Exercise is something you do. Assigned is something that's done to you. So assigned would be you'd be assigned long stock, and so that would be the effect if the stock price does close below the strike price by the expiration date. All right, Elaine, I'm sorry about your sound. If you can hear me now, hear this. The recording will be provided very soon, and you'll get the sound on the recording. I promise you that. All right, so hopefully that helps you out. Let's see. Our tools. Hey, if you've never tried our tools before, check out the 2-week free trial, and we've got some really incredible prices on this. And I will include the free trial along. But you know what? The free trial of our tools is below the description on all of our videos, except this one. This was my second live stream ever on YouTube, so I wanted to make sure, I got it right first before I started adding on things to the description, right? But so Jay, if you could throw that link on there, that'd be fantastic. Throw it in the live chat. I'll make sure that we put it in the message, the communication that goes out afterwards. So there you go. Let's see here. Worry about earnings. Do I worry about earnings in 2 days on Overstock? Bob, that's a fantastic question. So let's take a look at the stock chart of Overstock.com. And I apologize, I'm running a little bit late on this one, but guys, if you're cool with me adding an extra few minutes on here, I'm cool with it too. So with the earnings that are coming up in 2 days, as you can see it right here, what I want to do is this. I want to look at, I really want to look at the stock chart. So I'm going to go over here to stock and option table, and I want to look at the actual stock chart. So charts, stock charts, and then what I'm going to do is I'm going to turn on, that's what I want, that implied volatility chart. So OSTK, I think. Did I spell that right? I did? Okay, here you go. You know what? Let's run this out 100 days, and let's just look at what happened in last earnings. There's your last earnings cycle. Take a look at this. So this thing popped up right before earnings and then fell off. So what's happening now is as we get closer to earnings, when we're on the actual day of earnings, the options will blow up to be at their highest. That's also telling us that the stock is going to jump one way or another quite a bit too. So again, if you like Overstock.com as a potential trade and you like the idea of puts as a way of getting into the stock at a lower price, the closer and closer we get to earnings, the more expensive those options are going to get. Let me show you what I'm talking about. So let's go to the option chain on Overstock. And I want to show you two option chains. We're going to let's look at the Feb 26s, and let's also look at the March 19ths. Now the March 19ths have 25 days to expiration. The Feb 26 only have 4. Now I want to share this with you because I want you to see what happens. And let's go 25% below where the price is right now, because Overstock is not moving like Riot blockchain. So therefore, we might not be able to get those options at that time or for that kind of price. All right, here you go. So take a look at, let's just see what we could sell for $1. I'm going to throw that out there. So right now, Overstock.com's stock price, if you come down, is $97.68. For $1, you can sell right now. Wow, these really just keep going lower and lower. The 78.5 put, you can sell for $1. Okay, that means you can get yourself more than 20% below the current price of the stock, and get paid $1 for that. And you get and you could get the stock at 20% off today's price, or let's see what $1 can buy you. Well, let's see what the 78.5 or something close to it could get you with a March expiration date. So if you want to hang on to it a little bit longer, look at the 75s. The 75 puts with March, you could sell for $3 and well, the mid price says $3.23. So let's just go with 3. So 75 put can get you $3, but you got to hang on to it for 25 days, and Overstock can move around a lot between then and now. But you get $300 to obligate yourself to buy at 75. So 75 minus 3 is 72. That's your break even on this after getting paid. So that's just an idea there too. All right. Okay. So that handles the earnings, and I'll stop right here. What's your thoughts on these BTC option prices? I just saw something called Ledger X. My thoughts on BTC is that we're seeing volatility. I was looking for a pullback before the sell, and of course that pullback did indeed come. But is this a one-off, or is this something that could spark some volatility to pull back some more? I'll tell you this. At the beginning, not far past the beginning of our live stream, we discussed Fibonacci buy zones for Bitcoin and for Ethereum. So go back and take a look at those once we have the recording out. It won't take too long, and then this stream will be out for everybody to see. So guys, thank you very much for hanging out with me here this Monday. I'm typically a short sleeve guy, but it's a little chillier than normal across much of the U.S. And I woke up this morning, it was chilly here in Florida. I got thin blood, what can I say? But once again, I want to thank all of you for joining me today. And we'll be on same time, same channel next week. We'll do it all again. Next week, I want to talk about more on options pre-computes and option scans, and a little less than stock scans. So do something a little bit different next time. Till then, guys, have a great rest of your day. I will have another YouTube video that's coming up that will be available tomorrow. So you'll just have to tune back in tomorrow to see what's going on. Links for the Thursday webinar will be provided. I'll provide them both to you on this link. What's coming out? I'll have a comment on the link to the live stream. I'll also have a comment on the webinar that's coming up as a link to the video I'll be putting out tomorrow. So thanks again, everybody. We'll see you very soon. Bye now.